that area is deemed commercial. So the underused housing tax will not apply for that reason, because that area and the units themselves are considered commercial units. If you are an affected owner, you have to file by April 30th of the following year. Uh, this is for individuals that are non-residents, for corporations incorporated outside of Canada, and partnerships or trusts that have foreign interests. And the key part is that it's based on your status as of December 31st of the calendar year. And the onerous on this tax or on this filing form is that each individual has to file a separate return for each property that it applies to. So if you have 3 or 4 properties that this would apply to you, you would have to file 4 separate returns. If you share it with a spouse or someone else, now we have 8 in that same example. And this one is based on who actually owns who's on title of the property, not anything else. So now let's talk about the sale of your principal residence. Anything received from the sale is 100% tax-free, which you already talked about, and that's one of the main reasons that it's so important to know your principal residence and its exemptions. This is a new thing. It's only about 10 years old now, where the government wants to keep track of when you sell your principal residence on your tax return. So you have to file it and declare that you sold a principal residence. Honestly, before 2016, this was not a requirement. And the concern that most Canadians have is that this is the government's way of first getting information about how much principal residences, how many are being sold and transacted on every year, because ultimately they'll start taking away that as a key piece as well. That's the concern. We're not there yet, but depending on how things go, it could always change. If you're a non-resident, you have withholding taxes that apply if you're a non-resident. So whenever you're